Dear participants, thank you very much for joining us today. My name is Svetlana Platon. I'm Senior Financial Management Specialist at the WorldBank Center for Financial and Sustainability Reporting Reform. Before we start, we need to follow the protocol and announce the housekeeping arrangements as always. So, simultaneous interpretation is available today in Russian, Albanian, and Bosnian, Croatian, Serbian. To hear the interpretation, you need to select your preferred language. Please press the globe button icon at the bottom of your Zoom meeting window. If you cannot see the globe button icon, please press three dots icon and select your preferred language. To hear your language only and more clearly, you are invited to click Mute Original Audio. Your microphones and cameras are automatically muted and turned off during the entire event. Still, for questions, we kindly ask you to use Q&A box instead of the chat. The most relevant questions will be selected and answered live during the presentation. The event is being recorded, and tomorrow the recordings from previous 3 webinars will be available on our website, and recording of today's event will be added shortly, and the link will be shared with all registered participants. Webinars are organized by the WorldBank Center for Financial and Sustainability Reporting Reform under our regional program Enhancing Accounting, Auditing, and Sustainability Reporting. The regional program is co-funded by the Austrian Federal Ministry of Finance, the Swiss State Secretariat for Economic Affairs, and the Austrian Development Agency. We are very thankful to our donors for their great support on this important reform agenda. Let me briefly recap what we covered so far. The first 3 webinars were organized in cooperation with the IFRS Foundation and International Sustainability Standards Board. In session 1, we discussed IFRS Sustainability Disclosure Standards, objective, scope, and how global standards align with European sustainability reporting standards. The second session focused on industry-specific disclosures based on standards issued by Sustainability Accounting Standards Board. We looked at practical examples and case studies so to better understand how these standards apply across sectors. Then we learn about regulatory adoption, including the tools and resources that could support regulators in designing roadmaps and policies for adopting ISSB standards. Previous speakers have shared useful links to available guidance, tools, and educational materials. Links are included in slides that have been distributed to all registered participants. We encourage you to access and review these additional resources would support advancing sustainability reporting agenda in your country and are useful from both perspective preparers and regulators. And let me take this opportunity and thank the IFRS Foundation for such great cooperation. With special thanks to Aurora Akanksha, Director of Strategic Affairs at the IFRS Foundation, for her great support in organizing this series of webinars. Thanks, Aurora, very much for your support. Today's event is organized in cooperation with the Partnership for Carbon Accounting Financials, and we'll explore practical methodologies for calculating financed emission across various asset types. The webinar will be moderated by my colleague, Peter Ladegaard, Senior Governance Specialist. Peter is working primarily on state-owned enterprise and regulatory governance reform with extensive experience and expertise in this field. Peter, over to you now.
Thank you very much, Svetlana. Also, a warm welcome from my side. It's a pleasure to be able to moderate this event. I've been following peripherally the previous events, and I think they've been excellent. I see this fourth and final event to be, an add-on with even more complexity. So probably a good idea that comes as the fourth and final seminar because you've accumulated so much knowledge. So I'm very much looking forward to that. What I'll do now is just to briefly introduce our two key speakers who will then talk. As you will see, there is, as you've been instructed earlier, the opportunity to ask questions in the Q&A box on your screen. We would encourage you to do this on an ongoing basis, but there will be an opportunity to have questions not just at the very end, but also as Marco and Lina speaks. By way of introduction, Marco from the Partnership for Carbon Accounting Financial joined.
Peter, can you hear us? It seems we have a technical issue. Just a second.
Peter, you're mute.
Oh, that was interesting. I hear that now. So, Katerina, please do not mute me. Which part of my introduction of you, Marco, did you not get?
You cut off more or less in the beginning.
Okay, okay. I apologize for that. Seems to be an automatic muting, which I was not in control of myself. I will skip the earlier part of the introduction and go to the most important one, which is the introduction of you, Marco, and you, Lina, because it is very important that they get to know your very excellent background for today. So Marco, he joined Guidehouse in July 2021 as a managing consultant. He supports financial institutions in their transition into carbon neutral economy by 2050. Marco is the Europe co-regional lead and lead insurance associated emissions for PCAF. He facilitated development of the PCAF insurance associated emission standards as well. Before joining Guidehouse, he worked 2 years for the WWF in Switzerland in the sustainability finance team and was responsible for the engagement with Swiss insurance and the Swiss retail banks. This included projects to improve environmental performance of mainly Swiss insurance companies, as well as Swiss retail banks and the integration of sustainability within their core business. Lina from within PCAF leads the policy and regulation team. She's working on aligning PCAF standards with global sustainability frameworks, standards, and regulations. Her work focuses on harmonizing global Scope 3 Category 15 reporting and helping financial institutions and insurers comply to and lead through sustainability reporting. Lina also coordinates the PCAF engagement group for central banks and financial regulators, which fosters structured dialogue with regulators worldwide to promote harmonization and raise awareness of financed emissions reporting and climate-related financial risks. Through her work, Lina helps PCAF signatories navigate the complex sustainability regulatory landscape and ensure alignment with major reporting standards and frameworks. With the risk of being muted, I just want to say one last word, which I may have said before as well. That is that you will see on your screen a Q&A box, as Svetlana has also mentioned. This is where you're kindly encouraged to write comments and questions, ideally, during the presentations. We will be able to take some of these questions in the process of the presentations, or we may find a good place more towards the end of the presentation. But we do encourage you to chip in with comments and observations. The last point I wanted to say is, as I also mentioned in the beginning, this is probably in the complex end of topics that we are normally bringing forward here, and we may not all be expert. I think we are not all experts, so do not hold back on, if you like, questions you never wanted to ask because they were too embarrassing, because I think we are more or less all in the same boat here. So do also ask clarifying questions if needed during the process. With that, Marco and Lina, the virtual floor is yours. Once again, thanks very much for joining. We're looking forward to your presentations and discussions with you.
Thank you very much, Svetlana and Peter. Thanks a lot for the kind introduction. And then, of course, hello, everyone. Thank you for joining the webinar today. We really are excited to be here with you. Lina and I will present together. I will start with the presentation. Lina will then take over, and then you're going back to me. And I'm sharing now the screen. You should see my slides. I see nodding heads. Perfect. We will share the presentation in the afterwards, so no worries on that. You will get the material. And as Peter said, whenever you have questions, please put them in the chat. I have the Q&A open on the other screen. So ideally, I can also maybe potentially involve the answer on your question directly into my presentation part. Otherwise, yes, we have several breaks in between where we can address then also your questions. With that, just quickly before we head into the actual material, just quickly on antitrust. So in discussions also via online, please refer from any breaches of local antitrust and competition laws. Please respect them. And of course, from our point of view, the Chatham House rules apply. Yes, the meeting is recorded, but in general, we would encourage to respect the Chatham House rules. With that, you already heard who we are. Lina, she is our policy and regulations lead, and I'm one of the regional leads. We have several regional leads. I'm co-leading Europe, and I'm also leading the whole insurance work at PCAF. And with that, before we actually start with our presentation, we actually have a question for you. And maybe you can put in the answers into the chat. And first, we would like to know what comes to your mind when you hear the word GHG accounting. It should serve a bit as an icebreaker. Let us know what is your feeling, what comes to your mind, what is your association with the word GHG accounting. Greenhouse gas accounting, that's correct. So that's already good. We have established what GHG is standing for. So thanks a lot. Carbon pricing, that's an interesting one. Something very complex. Yes, that I see regularly when I raise that question. Carbon emissions, exactly. I'm still waiting for one specific word. Let's see if it is coming or not. GHG protocol, exactly. That's a very good link. Let me give another 30 seconds. Okay, that one I guess is in Russian. So I don't really know what it says. Also GSK, okay, carbon accounting. Yes, exactly. Carbon footprint. Yeah, I see some of the wording very familiar, but we also see one with actually very disclosures. Exactly. One that I haven't seen so far is actually data. So this is really interesting because typically when I bring up this question, at least in Western Europe, very soon the topic of data comes in. Echo in sound. I don't know. Okay, thanks a lot for indication, Lina. Yeah, no, I really like what I see in the chat. So thanks a lot for posting that. And maybe with that, we have a second question for you. Maybe a bit more the more experienced question. How familiar are you with PCAF? And we are aware that might be for many of you a completely new topic, but ideally you could indicate with a number. Perfect, people understand. Yes, please just indicate by number how familiar you are with the topic. You have never heard of PCAF before? Okay, that's also interesting for us because typically I do that in Western Europe, and by now it's usually I would say a 2 or a 3 or then 4 or 5. Somewhat familiar, and that's good. So that's really great, because I think then I really hope we can bring some value to you, that you really learn something new. So yeah, we are really looking forward to this. So with that, let's get to the agenda. So first, I would like to start with actually what is the connection between real emissions in the economy and financial activities. So how is everything linked together? Then I will provide an introduction to PCAF. Then Lena will cover everything around the whole beautiful world of regulation and central banks. And then we go back and I will talk about the PCAF standards. We have an example how you actually can measure financed emissions, the reporting requirements of the PCAF standard, and if you're interested, how you can participate in PCAF. And as mentioned, in between, we always have breaks for your questions. So later then we try to answer your questions in the Q&A box. Now with that, let's get into the topic of GHG accounting. So basically GHG accounting is measuring emissions associated with financial activity, and it provides a baseline for a sequence of crucial activities towards net zero. So typically with GHG accounting, financial institutions can start their sustainability journey. Some of you might already have a sustainability target. Maybe you have a net zero target, either because you do that voluntarily, or maybe also due to regulatory pressure or any other form of pressure you might face from regulation or governments. And then, of course, the question is always, how do I get to net zero? And of course, maybe some already have thought about the strategy. Maybe some already have also taken concrete measures or steps. But the basis for many actually is to measure the actual footprint. And of course, you might already measure your footprint for your operational emissions, but for banks, and we will show that for financial institutions, banks, insurance companies, the actual relevant footprint is really in the financial activities. So whatever you support with your loans, with your investments, these they create emissions. Basically, you are responsible for these emissions. So PCAF is about measure and disclosure. This is where we come in. We are a global partnership of financial institutions across the globe. We work together to develop and implement a harmonized approach to assess and disclose these greenhouse gas emissions associated with financial activities such as loans, investments, or also insurance underwriting. Once financial institutions have measured this baseline, many then start with setting targets. Setting targets would then really be to decide at which point in time do I want to reduce my emissions by which percentage. And you might have heard, for instance, from initiatives such as the Science-Based Target Initiative, Net Zero Banking Alliance, Net Zero Asset Owner Alliance. So there are various alliances out there which can help you, which support you with specific frameworks in setting these targets. Typically, once you have developed the target, you might then also start thinking about how do I actually achieve this target? So how do I reduce my emissions in 2030 by 50%, assuming this is your target? So then it's about developing a strategy and taking afterwards the relevant actions to actually also then really reduce the emissions. So this is kind of like how PCAF fits into this overall sustainability journey. So for many, we actually are the starting point. And I think this is a key sentence. What is getting measured is also getting managed. So GHG emissions, they are very abstract. We cannot see them, we cannot touch them. Potentially we can smell them when we think about the car or so, but usually we cannot see, we cannot touch them. So we turn something very abstract into something very concrete because it becomes a figure. Once it is a figure, management and everyone else can start thinking about how can I reduce this figure. Therefore, we really believe in measuring the GHG emission footprint. Now, when we talk about GHG emissions, we have the financial institutions and we have the emissions of the financial institutions. And then, of course, as a financial institution, you provide capital through, for instance, your investments and loan activities to your portfolio companies, to companies in the real economy. Let's assume it's a steel production company somewhere in your country. So you provide a loan to the steel production company. The steel production company produces GHG emissions with the money you have provided. You gave a loan. With that loan, the steel production company can build a new machine park. With that machine park, they can produce steel. This production emits GHG emissions. And these emissions, through the financial accounting, through financed emissions, go back into your own GHG emissions. And when we think about GHG emissions, you might be familiar with the GHG protocol. I've seen it was mentioned in the chat. So the GHG protocol makes a distinction between 3 different scopes. Scope 1 are your direct emissions. So your building, where your office is located, potentially also your cars you're using for your work. You have the scope 2 emissions, and these are indirect emissions, emission from heating or cooling of the building, for instance. And then we have the scope 3 emissions. And typically there, for financial institutions, we might have emissions from commuting of the employees or business travel. These are the usual suspects you will see in there, or maybe also buying IT equipment, buying office supplies, waste, things like that. And the emissions of these investments, they fall into category 15 within the GHG protocol. When we look into scope 3 emissions, they have 15 categories, and financed emissions are part of category 15, which is investments. Now, I mentioned that before. Why is that so important for financial institutions? There is a study, for instance, from the CDP. They measured that specifically for banks, and with banks, we see that the emissions of financed emissions are 750 times larger than the actual operational footprint. So in case you already are measuring your operational footprint, that's good. That's a good start. But if you want to think about sustainability, if you want to think about your sustainability journey, maybe also the net zero target you might have, sooner or later, you should include category 15. You should include these financed emissions, all these emissions which are associated with your financial activity. From our experience, we can say around 95 to 97% of the emissions of a financial institution are in this category 15, are in investments. And Lina will then also further explain how this is now, how we can see that nowadays also in regulation, but just kind of like that you have a first introduction to the topic and why is it so important for financial institutions to measure that actual footprint. Now, PCAF, well, we are a standard which can support financial institutions in the measure and the disclosure, but it's actually also much more because, yeah, we can support you in developing climate-related business goals because, as mentioned before, we support you with the tools to set the baseline. We ensure compliance with global regulation. Lina will cover that, but when you look into regulation, you see nowadays, usually there is a link to financed emissions. There is a reference on financed emissions, and either you see direct or indirect references upon PCAF. Typically, it might be that they say like such standards as PCAF. To our knowledge, and please let us know if there is any other standard out there, but to our knowledge, PCAF is the only standard which can help you and support you in measure financed emissions or any other emissions associated with financial activities. If you're aware in your local jurisdiction there is a standard, please let us know. We're more than happy to have a conversation with them. But as of today, we assume we are the only standard out there. And we as PCAF, we also participate in the whole ecosystem of net zero initiatives. And we will also highlight what that actually includes. Now, after this kind of like first introduction into GHG emissions and why do we measure them, let me introduce you to PCAF. PCAF has started 10 years ago here in the Netherlands, where I'm based, in a train to Paris for the climate conference. Several Dutch financial institutions thought that the GHG protocol doesn't give them enough guidance to measure these emissions, which are most relevant for them. Therefore, they decided we need our own standard, we need our own tools to measure this footprint. This was the starting point. In 2022, we then published also the first version of the standard. And as you can see, after that, we published additional standards. We also launched a database with emission factors. We, for instance, then also launched our online learning program. And over time, from 14 financial institutions which started this, today we are at 623 financial institutions across the globe. And we are also currently very busy with new methodologies. So later this year, we will publish new versions of 2 standards, and I will come to that also then in a few further slides. As mentioned today, more than 620 financial institutions in 85 countries. More than 270 financial institutions have at least disclosed once using one of the PCAF standards. You can find all these disclosures on our website. So if you're interested in that, please visit our website. You will find there the list of all the signatories, and those who have disclosed, you will also find these disclosures. And that's actually the only thing financial institutions have to share with us if they are a signatory. You're not interested in any client data or portfolio data. The only thing we like to see from signatories is the disclosure of their emissions. This disclosure typically is done either via the yearly financial reporting, via sustainability report. It can be a separate report. By now, many also use regulatory reportings, especially here in Western Europe. So things such as the CSRD reporting or the reporting for the European Banking Authority. So also these type of reports can be used to disclose the emissions. Speaking about Central Eastern Europe and Central Asia, as you can see, we have more than 30 signatories in the region. So you definitely see we are more than happy to welcome additional signatories, additional participants from additional countries in the region. Currently, the biggest chapter is in Poland, but we also can see more and more interest in other countries such as Romania, such as the Czech Republic. So we are confident that we can further grow the numbers in the region. So yes, so in that case, if you have any questions, if you're interested in it, please reach out to us. So we are more than happy to have a conversation with you on joining PCAF. We also have various chapters where we support our signatories in their journey, because part of the idea is community and collaboration. Therefore, we have various regional chapters. So we have regional chapters for the Asia Pacific region. We have regional chapters for Europe, but also then for Latin America, for North America, and also for Africa. Next to this, we also have what we call national chapters, which focus on a specific country. So we have a chapter for Brazil, for China, one for the Netherlands, where everything started, one for the United Kingdom, and we also have one chapter for the 4 German-speaking countries in Europe. Purpose of this is always coming together, meeting like-minded financial institutions, discussing disclosures, discussing developments within PCAF, but also be able to discuss specific questions financial institutions might have in regard to PCAF. We still believe in collaboration. I know not always very popular nowadays, but we still strongly believe in that. And we also offer various resources how we can support our signatories. So with a large collaboration or an ecosystem of a lot of collaborations, they might be on international level. So we collaborate with the SBTI, Science-Based Target Initiative. We collaborate with the CDP. We collaborate with all the UN initiatives in some way or form. But we also then have a lot of local collaborations where we, for instance, work with consultancies in the area to support the implementation of PCAF. We also have a partnership program for consultancies and data providers. So in case you're working together with a consultancy, please let them know that there is such a program. So if the consultancy or the data provider would like to learn more about PCAF, they can also reach out to us, and we can take up the discussion with them. As Lena already mentioned, and she will further go into that, we have an engagement group for central banks and financial regulators. I think this is really exciting. And then next to this, we offer a lot of resources to our signatories. There is an emission factor database. I will come to that. PCAF Academy, technical assistance. I will also cover these aspects. And then, of course, there are the standards, which will also I will also talk a bit more about it. And yeah, as already mentioned, so we provide you with more than just the standards. So the standards, they give you the tool, they give you the measures to calculate your emissions associated with financial activities, and also to disclose them. But we also provide real solutions for financial institutions to get to net zero. So we can help you in developing climate-related business goals, so that you really can think about how should my targets look like, how can I achieve these targets, which actions should I take to achieve these targets I have set for myself. As said, we collaborate with NGOs that, for instance, participate in the public consultations we have, but we also are in exchange with them. Yeah, we collaborate with a large network of like-minded financial institutions, also to make sure that we speak the same language, to make sure that we require you to do the same thing. So we really try to have harmonized language across the different steps in that sustainability journey. And last but not least, we also want to make sure that we are in line and ensure compliance with global regulation. So in case you have to disclose financed emissions because your regulators asks you to do that, or for instance, you're following IFRS standards, PCAF can help you to fulfill these requirements. And with that, I'd like to hand over to Lena, so she can then give you first introduction into the world of regulation. But before we go into that, are there any immediate questions on GHG accounting in general, or are there any questions on PCAF?
So Marco and Lena, we have not picked on any questions in the Q&A box, and our encouragement to put questions there still stands. But if I may then jump in with a question, which I think you may at least implicitly have addressed, but I think it's something which is on the minds of many of the speakers, that is the preferred or the defaulting standards that one is using in this particular context. You already did mention, I'm sorry, I will open my camera. You did already refer to a number of standards, but as you know, among the audience here, you have a number of different jurisdictions, some of which have chosen the preferred standards, but some which are still exercising the discretion that they have to take the most appropriate standards. So from your perspective, how do you see that balance that may be taken between adhering to some universal standards, but then also having some degree of flexibility within your own jurisdictions? How do you see this balancing act playing out, especially, of course, in your particular context with measuring emissions associated with financial activities and financial institutions across several jurisdictions?
Marco, should I take this one?
Yeah. That's
I
fine.
think that's also a good question. I hope I can also answer with the following slides or with my following presentation. But generally, definitely it's an evolving space. There are a lot of actually like basically every week a new proposals popping up in some country, and everyone is trying to figure out what is the best way to report. There are some emerging standards, such as, for example, the ISSB standards. We will also cover that later on. But generally, of course, it always, and I will also try to set the scene soon a bit about that. You have to think about what is material to report and where do you have actually influence and what data is relevant for the specific stakeholder. So it's a really individual question in a way, based on the type of company you are, but also based on the industrial environment of the specific country. So there's, as you will see, no one size fits all solution. So this is basically also where PCAF comes in with providing a standard that is so flexible that can be adapted to different regulatory needs and also industry needs. So maybe let's see if there are also further questions popping up associated with that, but I hope to answer a lot of that in my presentation.
Super, Lina, thanks very much. Please carry on, and colleagues on the call, feel free to drop questions in the Q&A box, and we may take them concurrently. Over to you, Lina.
Yes, great. Also encouraging again that questions are also anonymously, so don't feel shy to ask any questions you might feel weird about. Okay, great. So today I'd like to take you on a brief journey through what might feel for some of you as like a jungle of sustainability standards, frameworks, and regulations. And navigating through it can definitely be overwhelming and frustrating. So definitely been there as well, because there are new requirements emerging all the time, and existing ones are changing. So it's easy to feel lost in complexity here. And our goal today is here to bring some clarity into this complexity. And we also shed some light on how PCAF is helping financial institutions to align with those different global sustainability reporting regulations and also prepare for upcoming ones, especially when it comes to this omnibus big scope 3 category 15, which can be sometimes really hard to grasp. And I hope to also tie a bit of the strings from your previous seminars together by providing a big picture before we then dive into more technical questions of the standard. So let's start with the first slide. And before I will dive into any regulatory details, I just want to take a step back and ask the fundamental question of why are we reporting sustainability data in the first place? So traditionally, financial reporting is seen as the primary lens through which a company's performance is evaluated. However, that's no longer enough. So the rise of non-financial reporting reflects this broader shift that financial data alone doesn't capture the full picture of a company's resilience, risks, and long-term value. So that's why investors are increasingly relying on sustainability data. This includes different data, ESG data, such as resource uses, emissions, as we cover in the PCAF standard, but also the social impact. And this data is needed to guide investment strategies, manage portfolio risk, and respond to the growing concerns about short-termism. So this evolution is also shaping the concept of fiduciary duty. So this is expanding towards now environmental and social considerations. However, it's not just investors. So as you can see on the slide, there are also several internal and external stakeholders. So for internal stakeholders, we have risk managers, but also the strategy team. They use the sustainability data to inform business decisions, identify risks, but also opportunities, of course, and align operations with long-term goals. And then we have external stakeholders. So there we have different stakeholders that include regulators, policymakers, industry bodies, and civil society as a prod. And they are demanding greater transparency and accountability. And they also expect companies to disclose how their impact their environment and society as a whole, and how they plan to manage those impacts. So in short, sustainability data is no longer something nice to have to tell a nice green story, but it's actually a critical component of decision making across the board. All right, so on the next slide, we see that besides the need for sustainability data for decision making, there's also the global ambition to tackle climate change. So that's basically what unites us all today here as well. So the Paris Agreement, the UN Sustainable Development Goals, and a growing number of national climate commitments are really reflecting a shared international goal. We want to limit global warming, reduce greenhouse gas emissions, and transition towards a more sustainable and resilient economy. And to achieve these emissions, we need a transparent, reliable, and comparable sustainability data infrastructure. So that's also where regulations and reporting standards such as PCAF come into play. So on the one hand, we have standard setters that include also the ISSB, GRI, and PCAF, and they are developing disclosure standards, and with that helping companies to report. And they're also maintaining and evolving the standards over time, such as like we will be publishing a revised standard end of this year. Then on the other hand, we have the regulators that include national, but also regulators such as the European Commission and securities commissions, and they are permitting and recommending or even mandating the use of specific standards. And they also monitor the compliance and enforce reporting requirements. In some cases, they also impose legal penalties for non-compliance. So while these two different roles differ, standard setters and regulators really work hand in hand. So with the regulators often contributing to the standard setting process and standard setters supporting implementation and enforcement. And there is a wide range of standards and frameworks. You can just see a few on the slides at the bottom of the pyramid. And they're, as I said, helping the companies to report. So we have their GRI, IFRS S1 and S2. We have the European Sustainability Reporting Standard, ESRS. We have, but also other frameworks and standards like the Science-Based Targets Initiative, CDP, and PCAF. And all those frameworks and standards help organizations align with both global reporting expectations and national regulations. So they really support the implementation of climate and sustainability goals in the real business world. So over the past years, and especially the past 1 to 2 years, we've seen a surge in sustainability reporting regulations around the world. And for example, in the European Union, we have the Corporate Sustainability Reporting Directive, which is shaping disclosure requirements, but also beyond Europe, we have, for example, Brazil mandating climate disclosures for listed company. We have China piloting ESG reporting in key sectors, but also other countries, just naming a few here, Australia, Japan, Thailand, also advancing their disclosure policies. And this global momentum is really important and also encouraging. However, it also presents us with several challenges, and that's also coming a bit back to the question, because especially for multinational organization, it is difficult to keep track of all the different national approaches because they can vary significantly. And we will also visit this complexity later on in this presentation. Just wanting to broaden the angle now again a bit more because there are also more players influencing the supply and demand of sustainability data. So we can see on the next slide a picture of the whole ecosystem, and I hope that's not too overwhelming you right now. I will walk you through it because I really think that's fosters an understanding of why the system is so complex because there's so many stakeholders influencing the supply and demand of sustainability data. We have two main roles here. So everything that is on the left side is the information producers, and on the right side, we have the information users. So both groups play a critical role in shaping the type of sustainability data that is collected, reported, and also then used. So let's start with the information producers. These are the actors responsible for generating and validating sustainability data. So they include reporting entities. So assume, any company, any financial institution, in the call today is basically in this bracket of reporters. Then we have the disclosure platforms and software providers. They provide tools that support data collection and also, for example, emission calculation and the whole reporting process. And then we have auditors and assurance providers verifying the accuracy of the data. Then on the right side, we have information users. They include data providers and aggregators who compile and standardize data. Then we have the analytics platforms who interpret the data, for example, generating ESG scores. And then, of course, we have the end users. And those end users can be different stakeholders. So I already mentioned a few before. It can be investors, it can be executives, it can be civil society, it can be the general public. And then we have the last bracket, regulators. And they're not only mandating sustainability disclosures, but also using the data to shape action and policy. So now we come into the sweet spot where actually PCAF also comes in. So it's the frameworks and standards. And this is basically the center of the ecosystem. And what these standards and framework setters do is they enable the consistent and comparable reporting of sustainability data. And this is basically the foundation for both reporting and assurance. And also, Marco, we can see the email. Yeah, great. And also ensure that the needs of both sides, so I said the information producers and information users, are balanced. Because as you know, maybe internally you have, as a regulator, as a reporter internally, you may have cost constraints, you may have resource constraints, and you say, yeah, I just want to report a certain bare minimum of data maybe, and then but there's also different players here, such as maybe the end users who say like, yeah, but I want to have like a deep view into where the company is when it comes to sustainability. So we have both sides, and yeah, the frameworks and standards are basically balancing this out. And this is also PCAF's role in the whole sustainability data ecosystem. We provide a calculation methodology for financed emissions or emissions associated with financial activities, and balancing those needs of both data users and producers. So as producers, for us, it's the financial institutions with the users such as external stakeholders. All right. There's also another concept, so on the next slide, that decides on what data will be reported. And this concept is called the concept of materiality. And you might have already heard that in previous presentations, but depending on the materiality approach you choose, so whether it's a financial materiality, impact, or double materiality, this defines what data is relevant for your company to report. So in other words, materiality defines which data is material for the reader or for the stakeholder and to know about your company. So this different angles in the end decide whether what data you report and what data you don't report. And this materiality is also shaped by stakeholders. So the stakeholders to whom the report is intended for. So for example, if the primary audience is investors, the focus will be primarily on financial materiality. So reporting sustainability data that affects the financial performance and decision-making for investors. And if the audience include a broader stakeholder group, such as civil society, regulators, or the public, you may use the impact materiality, because here you focus on how the company affects the environment and society. So yeah, the data you in the end report is slightly different. And then there's some cases where both perspectives are actually important, and this is the double materiality, and it combines financial and impact considerations. So again, trying to rephrase it in another word, so we have everyone on the same page here. We have financial materiality focusing on sustainability issues that affect the company's financial performance, and that's also covered by IFRS S1 and S2. And then we have the impact materiality, which looks at how the company is affecting its environment and society, so the other way around. This is central to the Global Reporting Initiative, I will also cover later on. And then we have the double materiality, which combines both approaches. And that's the foundation of the corporate, the CSRD and the European Sustainability Reporting Standards. And we will take a closer look at those main standards today. There are also other factors who can, again, influence the type of data you report. Can be the time horizon of reporting, so it can be rather backward-looking. So the PCAF standard can be used to report on the impact you have through your portfolio and investments, but it can also be used as a forward-looking metric where you use the PCAF standard to report on transition risks of your portfolio. And then there are also generally other differentiators between different standards, which sometimes standards are industry agnostic and sometimes industry specific. So all of the factors that I've just covered can create inconsistencies in reporting requirements, and inconsistent disclosure standards and varying market guidance make it difficult to compare sustainability performance globally. And this creates barriers across markets and confusion for both the reporting companies, but also investors. Importantly, it's not just companies and investors calling for change here, it's also regulators that have voiced the need for a consistent and comprehensive global disclosure framework. And as I already mentioned briefly in the beginning, as we can see on the next slide, there's no one-size-fits-all approach, unfortunately, because national requirements are different, and those are shaped by factors like the maturity of the local reporting practices. So is there already ESG reporting in place? But it can also include how ambitious is the financial reporting practices. So is it rather a country that is used to quite strict reporting guidelines, or is this more on a flexible side? And then, of course, the general policy and economic environment plays an important role, but also the composition of local industry. So if, for example, your industry is focused on mining companies, you might, looking for different data to report than if it's focused more on services. And then also what we've seen recently impacting the changes that are currently going on the social and especially political context of the country, which is shaping regulations and also can lead to changing regulations. And finally, also to the level of demand for sustainability data. So basically, as a result, regulators adopt different approaches. And as you can see on the scale at the bottom, you can either opt for flexibility, so basically allowing companies to tailor their reporting to their needs. However, this can also come at the cost of comparability. So everyone reporting something different makes it really hard to compare sustainability reports. So, for example, for investors to make then a decision. If on the other side of the scale, you can choose more prescriptive approach, basically saying you have to report on A, B, and C. And this enhances, of course, the consistency because you can compare, for example, qualitative and quantitative facts side to side. But that also reduces adaptability and can lead to basically, I would say, an over-reporting if you report on data that's not really material to your business, but is kind of required by the regulator. So tailoring standards and frameworks to balance out those needs and then also have them in perspective of a national setting is really challenging. And this is where the PCAF standard also stands out because it's principle-based and it's really flexible and hence globally adaptable. And in this way, we are positioned to support financial institutions in navigating this diverse and evolving reporting requirements. And for one, it allows financial institutions to select calculations and methodologies that best fit their portfolios and financial services. So they don't need to report on anything that's not material for them. And it provides also detailed guidance on, of course, Scope 3 Category 15 emissions. The PCAF guidance often goes beyond the general emission disclosure requirements outlined in regulatory texts. So we provide really specific calculation methods for specific financial activities. And additionally, Our mission is to provide a globally harmonized standard for calculating Scope 3 Category 15 and to ensure that data is reported consistently, transparently, and comparably, regardless of where you are in the world. And that means using the same assumptions, methodologies, and definitions across the world and across the financial industry. And to achieve this, we really work on interoperability with global standards and national regulations through ongoing research, active engagement, and also responses to public consultation. And we can be broadly say on the next slide that we are aligned with the main standards globally. So we aligned with IFRS S1 and S2, which is currently rapidly becoming the global baseline for sustainability disclosures. We aligned with the Global Reporting Initiative, GRI, which focuses on impact materiality. We aligned with ISRS. We are aligned with SASB, which emphasizes more on a sector-specific financial materiality. And what is the foundation? Towards global comparability of emission data, PCAF is also built upon the Greenhouse Gas Protocol, ensuring that Scope 3 Category 15 emissions are calculated and reported in line with all other emission scopes and categories. And this alignment is really crucial, especially because most regulations are now building their requirements on IFRS S1 and S2 or GRI. And in fact, you may already have heard that from the presentation of ISSB. More than 30 jurisdictions are currently making progress towards implementing the ISSB standards into their legal and regulatory frameworks. And importantly, most of them that have finalized or proposed the climate-related disclosures are also including Scope 3 emissions, and this also includes Category 15. There are some that offer transitional reliefs, but the direction is still clear here. So Scope 3 is becoming a global reporting expectation. And by aligning with these standards, PCAF enables you as a financial institutions to meet those requirements. So let's now take a closer look at the major sustainability reporting standards and how we're actually helping you to comply to them. And now that you're probably familiar with IFRS by now, and just also as the for the background again, that it was created to streamline the fragmented landscape of sustainability reporting. So really, putting together major frameworks to create a global baseline. And now we have the IFRS S1 and IFRS S2, and of course, industry-specific disclosure requirements. So for IFRS S2, when you look at the chapter of metrics and targets, if you can click one further, Marco, you can see that this is where Scope 1, 2, and 3 emission reporting is required. And so if you then look further, there's a reporting required broken down by loans, bonds, equity investment, project finance, and undrawn loan commitments. And the PCAF standard enables financial institutions to calculate and disclose these finance emissions in full alignment with IFRS S2. So in fact, with the upcoming update of the PCAF methodology, undrawn loan commitments will also be covered, which hasn't been so far. So this ensures the complete interoperability with IFRS S2. So if you calculate with the PCAF standard, you can be sure that you can report to IFRS S2 requirements. And as I mentioned, this is really important as it's based for, as IFRS S1 and S2 are the base for national regulations worldwide. And as I mentioned also earlier, everything is constantly changing and still evolving. So for all the main standards we're covering here, there are actually currently additions or amendments pending. So everything is changing, and we all try to keep track of it. So ISB has proposed amendments to IFRS S2, especially the metrics part on Scope 3 reporting and certain jurisdictional differences. Okay, let's now take a look at the European Union. So the European Union is leading the conversation on sustainability reporting through their Corporate Sustainability Reporting Directive, in short, CSRD. And it's a major regulatory initiative that requires large European companies and certain non-European companies with a significant operation in the EU to disclose their detailed sustainability information. And to implement this directive, the European Union actually has developed their own standards, which are called the European Sustainability Reporting Standards, in short ISRS. And these standards define how companies must report on ESG data. And one of the most critical components of ISRS, at least for PCAF, is E1, which is climate change. And this topic, or this chapter, includes requirements for Scope 3 emissions, including category 15, so finance emissions, and that's particularly relevant for financial institutions, of course. And the PCAF standard here is explicitly mentioned also in the annex to the ISRS as the preferred standard. If you can click one further, I think there's another window popping up. Yes, that was the one I was looking for. And also here we have, of course, you may have heard about that, at least my whole news feed is full of it, the omnibus package. So that's something the European Commission released earlier this year, and it's aimed to simplify and scale back some of the CSRD and ISRS requirements. And we know that a clear focus will be put on quantitative data. So even though it's changing, it is highly unlikely that the reporting of Scope 1, 2, and 3 emissions will be excluded. And EFRAG, which is the body who is drafting the standards, is currently working on a simplified version, which we can expect October this year. Okay, last but not least, we have the Global Reporting Initiative, or GRI, which is one of the most widely used sustainability reporting frameworks. And it was established to help organizations report on ESG impacts, and it really has become the global benchmark of impact reporting over the past years. And before ISRS was there, this was also one of the main standards applied in the European market. So the standards are structured into 3 different groups of standards. We have universal standards, sector standards, and topic standards. The universal standards apply to all organizations, cover general disclosures. The sector standards are specific to sectors, as it already says the name. And then the topic standards are addressing different sustainability topics, such as emissions, energy, or labor practices. And when you click one further, one key topic standard is GRI 305. And this standard sets out how organizations should report on their greenhouse gas emissions, and this includes Scope 1, 2, and 3, emission intensity, and reduction of greenhouse gas emissions over time. So actually a month ago, GRI introduced a new climate-related standard, which is GRI 102 on climate change. And it will replace GRI 305 from 2027 onwards. So the addition here is that it's not only covering emissions, but also a wider climate action strategy. And looking ahead, GRI also is currently developing sector-specific guidance for the financial sector. They're currently in review to be expected in Q2. In their proposal, they also included finance emissions, facilitated emissions, and insurance-associated emissions. Marco will tell you a bit more about those different types of emissions later on, but that they are all covered in the PCAF standard. All right, now with that, I would at the end, I would say a few more words to the central bank and financial regulatory groups, but we can also pause for question first.
Yes, thank you very much, Lena. Brilliant. We do actually have a question, which I'm not sure whether you will answer that, Lena or Marco, but it comes from Paul Thompson, and the question is, are you aligned with the IFRS VSME, the Sustainability Reporting Standards for voluntary use by non-listed SMEs?
Mm-hmm. So we are aligned with the ISRS reporting standard, and when it comes to the reporting of financial or emissions associated to financial activities, we are aligned with that, yes.
If I may, an additional question that is constantly keep popping up in my mind is the question not of complying with standards, but getting the data to inform compliance with these standards. And as you know, we are operating in many constituencies here, which are not as data rich as some of the EU countries. There are lots of countries here with perhaps still in the process of developing. So Can you elaborate a little bit on how financial institutions, but also I guess others who are in this space, can practically address these data quality challenges when reporting Scope 3 emissions? Can you also perhaps provide a few examples of some of the difficulties and how they can be resolved, and including, of course, how PCAF can handle double counting of emissions when several institutions may be financing the same asset?
Should I take that one, Lina? Yeah, so I mean, data availability is a big issue, and it's still also in the EU a big issue, especially if you have SME portfolios. So listed companies, not a problem. They typically report, but as soon as you have larger SME portfolios, it already becomes quite difficult. So I will address the topic kind of like how the data, kind of like what would be the preferred data. But basically, if you don't have client data available, what we would recommend is to work with sector averages. Either they are based on physical activities, coming back to the steel production company example, the ton of steel which was produced by your client. If that information is not available, you could also use emission factors based on economic activity, so typically the revenue. So there are actually databases out there which have such emission factors published. I admit, mostly for the European Union, North America, United Kingdom. There also are UN databases, and PCAF actually has a collection of such publicly available emission factors. And I will cover the whole data topic, how we can support signatories on the whole data journey. I will cover that. On the double accounting, yes, in theory, that is a problem. I would say if we would have a global GHG emission balance sheet. As long as we don't have it, I would say maybe it's more a philosophical or virtual exercise on double accounting. So that's, for instance, one of the reasons why we actually recommend to report Scope 1 and 2 emissions separated from Scope 3. So we are in the Scope 3 emissions of the financial institution. If you look into the Scope 3 emissions, again, you can make a distinction between Scope 1, 2, and 3. I know this can be a bit overwhelming when I explain it like that. But basically, you take the looking glass, you look at your Scope 3 emissions, financed emissions, and then again, you can make the distinction Scope 1, 2, and 3. Now, there the standard clearly states Scope 3 has to be separated from Scope 1 and 2 emissions, and this helps to address the double counting issue. Of course, it might be a bit of a special issue, especially for insurance companies. There we might have the interesting situation. On the one hand, you're invested in a company. On the other hand, you're insuring it. So there we would have double counting. But again, here we say these emissions have to be reported separately. They cannot be added up. So again, to address this issue, same might also happen on the banking side, assuming you might have also an investment arm. So you invest in a company at the same time, you also provide a loan. Again, yes, double counting might happen. There we would definitely recommend to potentially report separately. So you report the emissions from investment and report the emissions from loans activities. I think these things can help to address double counting.
Wonderful, thanks, Mark. I mean, the first part of your answer, I think that was one thing that I like in particular, namely the reliance on sector averages. Also in this space, this is really an acceptable and dearly appreciated shortcut in many cases where you simply cannot harvest this information. So thanks for clarifying that as well.
And actually, many are using that, and many are using these sector averages.
I'll hand it over to you again, but just a small reminder to keep an eye on the total timing so that we can calibrate the total set of slides to also allow for a little bit of Q&A towards the end. But over to you again.
Yeah, we'll just take 1 minute here. Also, yeah, we've been informed that there are also some representatives of central banks in this group, and I just wanted to briefly give an overview of our engagement group for central banks and financial regulators. Maybe we can also skip already to the next slide, because this group has been created to share knowledge, insights, and best practices. And yeah, we really want to have a collaborative space where we can, on the one hand, provide you with technical support, access to the PCAF emission factor database, and also to our academy, And it's meant as an exchange platform between central banks, financial regulators, and PCAF, both sides. And if you can go to the next slide, we've also designed the program to be as accessible and low effort as possible. So participation is actually free of charge for central banks and financial regulators, and the time commitment is really minimal. And our aim is here again to create a space for collaboration and mutual support. Yeah, with that, we're happy if, you can reach out to us anytime about that. And with that, I'm handing over to Marco to continue now. Thank you.
Thanks a lot, Lena. And with that, let's get directly into the PCAF standards. You have heard now several times about them. So we have actually by now 3 different standards. Part A, financed emissions. So this is really what you're doing in your daily business as a commercial bank, as a development bank, as an export credit agency. So typically all of them are using the financed emission standard, and it really covers all these activities a bank traditionally is doing. And you will see this asset class that we're currently covering later in the presentation. You have the part B, which is for facilitated emissions. So this is all about the capital market transactions. So typically activities done by investment banks when new equity or bond capital is issued. And we have the part C, insurance associated emissions, everything around the insurance activities when we are talking about underwriting. As an insurance company, you can also use part A, financed emissions, for your investment asset management activities, but for underwriting, we have part C. Now, as mentioned before, we have been busy with developing new methodologies. The consultation was running from December last year till March this year. The consultation documents are still online, so you can still read the 2 papers for financed emissions and for insurance associated emissions. We also recorded technical webinars with the various experts from the different working groups. So if you're interested in one of the specific new methodologies, you want to learn more, please visit the website. Please watch one of these videos. They're always 1 hour long. Now, what is coming? We have developed new methodologies for use of proceeds accounting. There will be GHG accounting for green bonds, transition bonds. Sub-sovereign debt, and that I think is a critical one. This is really then, we have a methodology for sovereign debt. So this is really on a national level. So debt of Germany, debt of France, debt of Bosnia-Herzegovina. But sub-sovereign debt is really addressing everything below the national level. So here we're talking about debt to provinces, regions, however you call them in your jurisdiction. Or then it's also for cities and municipalities. So we know for many, this is a key asset class or sub-asset class. And we also have developed a new methodology for securitizations and structured products. Next to this, we also have developed additional guidance. One guidance is focusing on finance avoided emissions and forward-looking metrics. One is a discussion paper on inventory fluctuations. And last but not least, and I think that's also a key one, is on their own loan commitments. So with that guidance, we are fully harmonized with ISSB IFRS S2. As shown by Lena, it is a separate asset class there. Therefore, we wanted to address this with the consultation. For insurance, the standard, we have developed 2 new methodologies. One is for treaty reinsurance, so the core business of reinsurance companies. And they insure or reinsure a large part of the portfolio of prime insurance companies. And we also have developed a methodology for project insurance. Now, both new standards will be published in autumn of this year. So the standard for financed emissions and the one for the insurance business. We have a month in mind. We don't disclose it yet, but you can assume somewhere between the major climate events we're going to have in autumn, somewhere in between, I guess, New York Climate Week and the COP, somewhere in between the publication will happen. Obviously, we will make noise about it. So we will read about it on LinkedIn, but of course, I assume also in respective news outlets. If you want, what I always recommend is follow our LinkedIn account. There you definitely will know when the standards are published. And of course, we obviously also inform our signatories, and we then also have webinars. Now, what do we cover with financed emissions at the moment? We have 7 methodologies: listed equity and corporate bonds, business loans and unlisted equity, project finance, listed commercial real estate, mortgages, motor vehicle loans, sovereign debt. Now, for these 7 asset classes, you will always find a specific methodology in the standard. Methodologies always slightly differ, but the idea is always to determine what is your share on the emissions. An easy example: if you finance a real estate building with a mortgage, if you mortgage this, the mortgage is 50% of the value of the building, you are responsible for 50% of the emissions of that building. That's the overall logic of the PCAF standard. And so for the different methodologies, different asset classes, different ways how to calculate it. We will later on also show an example how such a calculation can look like, but that's actually the approach. We always have the so-called attribution factor. We multiply it with the emissions of the project, of the building you are financing. Same goes with insurance. There we currently have 2 lines of businesses which are covered by the standard. We have commercial lines. That is a very general term. On the next slide, I will quickly explain what is included, what is currently out of scope. But commercial lines really covers everything which is commercial clients. So companies which are insured by insurance companies. And we also have a methodology for personal motor. Personal motor, when we look into insurance business, typically personal motor is the most important line of business on the personal business side. So personal business would really be insurance for people like you and me, everyday people insuring their car. Also, again, here, same idea, same approach. We have the so-called attribution factor, which is multiplied with the emissions of the insured, or in that case, of the vehicle for personal motor. And for personal motor, PCAF also has calculated the global attribution factor, which we actually also recommend to use across the globe. You can find more details on how this attribution factor was calculated on our website. The link is also in this presentation, but already can tell you the attribution factor is 6.99%. Now, what is covered and what is not covered by the commercial lines methodology of the insurance standard? As you can see, a lot of various segments or lines of businesses are actually covered. So, for instance, property insurance, liability, casualty, but also things such as marine, aviation, agriculture is partly covered, but also some of the engineering lines are covered, some of the specialty lines are covered, and also the statutory lines of businesses are all covered by the methodology. Now, some things that actually also are out of scope. So, for instance, the more complex trade credit businesses is not covered, surety is not covered, the engineering lines are not covered, but also corporate life and pension and public entities. And for instance, engineering lines, that was also one of the biggest criticisms from NGOs. Therefore, we have now developed a new methodology how to do the calculations for the engineering lines. Now, make this a bit more concrete. What does it actually mean? So how do we really calculate financed emissions? And this is now an example for financed emissions. The logic behind it applies, would also apply for insurance. It's always the same. We take the so-called attribution factor and it's multiplied with the emissions of the investee. And the attribution factor here in this example, it's either the outstanding amount divided by the total book value of equity and debt in case of a private company. And if it's a listed company, we would use the so-called enterprise value, including cash. These values are needed to calculate the attribution factor. And then also coming back to the earlier question of Peter, we have a hierarchy of preference regarding emission data. As mentioned, ideally, you would have reported emission data from your client. Again, if this is not available, we could use the physical activity-based emissions, the steel of ton which was produced, the ton of milk which was produced, things like that. Or you can also use the economic activity-based emissions, so building upon the revenue. But as you can see, physical activity would be preferred because it's more accurate than the more general economic activities. Now, let's assume you have provided a corporate loan to Coca-Cola. Again, we follow the logic. We take the investment amount, we divide this by the equity and the debt. So the overall EVIC of Coca-Cola, let's assume it's 331 billion US dollars. Your corporate loan is 15 billion US dollars. When we do the calculation of it, we end up with an attribution factor of 4.5%. Now, next step would then be to take these 4.5% and multiply it with the emissions of Coca-Cola. Coca-Cola listed company, you could find this information in their sustainability report, or for instance, in Bloomberg, CDP, MSCI, your trusted data support, delivery supporter. You take these emission data, multiply it with 4.5%, and then you have your financed emissions. And basically, GHG accounting is doing this line per line in your portfolio. So if you have 1,000 corporate loans, you do this 1,000 times with each line in the portfolio. If you do that, add all these emissions up, you will have the GHG emissions for your commercial loans portfolio. Of course, you could do then the same thing for your listed equity portfolio or for your mortgages, but the logic is always the same. You calculate an attribution factor, you multiply this attribution factor with these emissions. This is actually what you do in GHG accounting. Also coming back to the topic of data, PCAF also introduced this concept of the data quality scores. The scores are 1 to 5. 1 would be the best data coming from your client, also externally verified by someone who is able to do that, down to score 5, which is then based on very granular, very generic economic activity-based emission factors. Many of the large data providers actually have adopted this system of the data quality scores. So if you buy your data from Bloomberg, if you get your data from MSCI, very likely you can also get this information on data quality scores. So you will already know when you get this data, what type of data actually is it? Is it very good data quality? Is it very low data quality? The PCAF also recommends to include this information in a public disclosure. So make the public aware with what type of data have you done your calculation. And part of the journey would then also be to start thinking about how can you improve the data quality on your side. So let's assume you have done your first calculation. Ideally, you're able to identify the hotspots in the portfolio. And maybe these are 20 clients. Let's assume it's 20 clients. With 20 clients, you could have a conversation with to discuss, dear client, you are responsible for, together with some others, you're responsible for 50% of our emissions. How can we get better data from you? Fully understand you cannot do that with thousands of clients. That's impossible. This is really a lengthy journey. But with a handful of clients, you could have such conversations. So part of the strategy would also be to thinking about how can you get better data over time? This idea, of course, you already can implement that with new clients, that you already have certain requirements in regard to data transparency, that they have to report data to you. But such an approach could help you over time to improve data quality and therefore also improve your calculations. And actually see there is a question in the chat. Maybe I already can take into account when an FI approves a loan to a company and calculates its share in client emissions. Does a company deduct this share from its total emissions? No. So basically, what you do is you really take the company emissions and you calculate your attribution to it, and this is what you report. So this is really like, let's assume you take Coca-Cola example again. Let's assume Coca-Cola has 1,000 tons of GHG emissions per year. You really take then this 4.5% multiplied with the 1,000, and this is then 4.5 tons, which are then yours. That's basically then how you would calculate these emissions and attribute them to you. And
if I may
yes,
just, there was also a question asked, which Lina kindly responded to already, but just for the sake of translation, I just read the question again, and Lina, if you don't mind, just basically repeating your question, but for the sake of translation, it's good that we have it also in spoken language here. So the question was, which methodologies or emission factors are you applying on the PCAF for your finance emissions calculations across asset classes? And Lina responded the following.
Yeah, thank you for your question. No, yeah, it depends on the asset class. So Barco already presented, we have different methodologies for different asset classes. So where the basic concept is always the same, you have the attribution factor and the emissions of the investee. How you calculate the attribution factor differs, for example, in different asset classes. And then, of course, the emissions of the investee is also different. And in the PCAF database, Marco will probably also get to it later on. You can then also find the respective emission factors for the calculation methodologies.
Yeah, and there's actually also a table in the PCAF standard which can help you identify the asset class. So basically, you identify what type of business am I providing. You can follow that table, and the table will tell you in the end what asset class is it according to PCAF. So basically, is the business covered by PCAF or not? So if you if you struggle with that, I highly recommend. I don't have the page number on top of my head. I think it's somewhere around 40 or low 50s. Yeah, maybe Lina, quickly you could check it. But we have a table in there which can help you identify the correct asset class according to PCAF. Then, as Lina said, you can apply the correct methodology to your portfolio, and as I will come to it, we also then have specific emission factors for the specific asset classes.
We seem to be on a roll here, Marco and Lina, with some incoming questions. So I think we will just actually continue in the Q&A mode, although I do see that we also breaking the flow a little bit here, but there are some good questions that I think could be relevant to answer now. And in no order of importance, here's a question from Oksana Parakeva. Thanks very much for that. How can indicators be calculated for companies that are not listed on the stock exchange?
Again, same logic applies. So also a non-stock listed company, they might actually do GHG accounting. They can report these emissions to you. The exact same data scores would apply. So all of this, which I'm presenting you, and I think this is also important, it's always sector agnostic. So the PCAF methodologies you can apply across all the sectors in your portfolio. Steel production company, airline company, the barber next around your corner, the restaurant around the corner, you can apply these methodologies all across the sectors, and also the data quality scores can be applied for stock listed companies, but also for private equity or non-public companies. There is no limitation on that. Exactly, yes. And this is then also the second question. The methodology is interesting, and the Coca-Cola example is clear. Could it be applied to SMEs where carbon emissions aren't measured or quantified? Yes. So basically there we then would really take this example of, again, I'm coming back to steel production company because I think it's a very easy example to follow. Let's assume first you calculate the attribution factor. Then let's assume they have produced 1,000 tons of steel last year. You take these 1,000 tons, and then you can, if you, in the PCAF database, you might find then also an emission factor for steel production in a specific country or at least in a specific region. Then you can take this 1,000 tons multiplied with the emissions of the steel production. There you would also then get to the GHG footprint. Same would also go if you don't have information on the physical production, but the revenue. Let's assume $1 million US revenue last year. Again, you take the respective emission factor, you would also get to the result. And this is actually how everyone is doing it. So also here in Western Europe, where you might think they have better data available, I can tell you they don't. Especially with SME clients, it's the exact same issue across the globe. Everyone is struggling with SMEs. And so therefore also having SME portfolios and having no data, we can help you with that issue. So therefore I would argue it's waiting for perfect data. We don't have that time anymore. I would say it like that by now. So we can help you with the data journey. We can help you starting this accounting journey. Then, of course, over time, you can think about how to get better data. But data, everyone is struggling with data. Data availability is for everyone an issue. So not having data, I would say for me by now is not an excuse not to do that. Because once you start that effort, it also starts to trickle down and people start to think about the whole topic. So, yeah.
Makes perfect sense, Marco. Carry on.
Yeah, and so with that, I would like to cover quickly reporting requirements. So the PCAF standard also provides you with reporting guidelines. So how can you report actually these financed emissions? And from our point of view, of course, such disclosures should be done publicly. So it is part of your annual report. It is part of your sustainability report. And we have defined some terminology, which you might also find in other standards. Shall, you have to do that. No way around. Should, it's a strong recommendation. May, it is an option. Needs, can, cannot, it is a guidance. An example, so you have to disclose scope 1 and 2 emissions. You have to disclose scope 3 emissions. That's a shall. Data quality, that's a should. We recommend to include the data quality scores, but you don't have to. So in that sense, the reporting chapter will guide you through the requirements of PCAF. Coverage, from our point of view, when you start reporting towards PCAF, you can do that with a very low coverage. You could do that on one asset class of your choice and part of the portfolio. But of course, ideally, you disclose as much as you can in the in your portfolio, and you shall also indicate how much of your portfolio are you disclosing. Is it 10%? Is it 50%? Are you disclosing 100% of your portfolio? Scope. It is about disclosing the absolute emissions. That is what PCAF is about. It's not about emission intensities. Yes, emission intensity is important, especially if you want to compare with other financial institutions, but PCAF requires you to disclose the absolute emissions. If you're not able to do that, PCAF in that sense is very easy, comply or explain. So if you cannot report on something specifically, you shall explain why you can't. And flexibility, we all understand the start is difficult. It might look very overwhelming, especially again on the data side. So there we really, we give you flexibility if you have to make certain amendments to the methodology or to the approaches or to data availability. This is always possible. Here we always also recommend to indicate why and specify reasons for it. We follow certain principles. So we have the shall principles. They are based on relevance, completeness, consistency, transparency, things like that. We have the frequency. So typically this is done once a year, usually in line, many do this in line with the financial accounting. We have the recalculation. So if there are reasons why you might have to recalculate your footprint, we recommend to develop such a policy when you want to do that. Might be, for instance, if you're taking over another financial institution, or if there are major changes in your business or in the data availability, this could trigger a recalculation of the original footprint. Reporting form. So typically it should be done in form of an annual report, and it should be publicly available to everyone. Purpose, from our point of view, ideally it also aligns with your business goals. So it's not only about reporting for reporting's sake, but it can also give you benefit internally for also then, for instance, in order with the overall transition you would like to go. And past performance. So ideally, of course, you can also highlight how your emissions are doing over time. So ideally, of course, they would decrease over time. So a report should indicate that in due time. So what you have to disclose, of course, it's the CO2 emission. So the CO2 equivalent, that's the metric we are using. CO2, this is really all the 7 gases under the Kyoto Protocol. So not only carbon, but for instance, also methane and other types. This is about the absolute emissions which have to be disclosed. You can also actually report avoided or removed emissions. So removed emissions would be negative emissions, so atmosphere which are removed from the atmosphere in any way or form. That's also possible according to PCAF. And of course, you can also, if you want to, report emission intensities. If you, for instance, want also to compare yourself against the benchmark or maybe also against your competitors. Data quality. Yes, we recommend you should definitely shall use the most recent data available to you, and you, for instance, indicate to use the data quality scores and disclose them. And with that, we are coming to the last part. If you want to participate in PCAF, so what is the difference between a non-signatory and a signatory? So as a non-signatory, the standard, it's publicly available. You can use it today if you want to. If you want to start this journey, that's absolutely fine. But all the other resources we are offering to our signatories, this is really only for signatories. So as a non-signatory, you don't have access to them. Now, what do we offer? For instance, standard development. So as a signatory, you can be part of the standard development of these working groups we have. We like to have inclusive working groups, so we don't want to have only the Deutsche Banks and the HSBCs of the world in these working groups. We really also want to have smaller financial institutions also from developing countries in these working groups, because the goal is that these methodologies should work across the globe and not only in North America or Europe. Technical assistance, and this is really key for many financial institutions. So we offer technical assistance to all our signatories. So this means if they have a specific question on their calculation, they read the standard, they're not fully sure how to interpret it, and I know the language can be vague, they can always reach out to us via email. We will answer that question with a verified answer. We also offer by now office hours every second week. Signatories can call in live, ask their questions on the spot. We also offer additional tools, templates, guidance, which can support the signatories in this journey, trying to make their life easier. Next to this, and this is now the PCAF database, as mentioned before. So we have collected a lot of publicly available emission factors. We've added them into one database, so everything is available in one spot. We will also are currently testing a new data set for economic emission factors from Watershed, the so-called CEDA data set, which is very comprehensive, around 60,000 emission factors across the globe. It covers also many of the developing countries by now. So this data set we are currently testing. All emission factors can be downloaded into Excel. You can use them in Excel. We also have mapping against various industry classification codes. There is information on the data quality scores. We also regularly do update the database. So this is really a great starting point for financial institutions to start the journey, especially if you have SME portfolios, especially if you don't have client data available regarding the emissions. So this is really one of the sources most of our signatories are using. Is also the reason why many signatories are with PCAF, because they rely on this emission factor database. Another great source or support we have is the PCAF Academy. That's our online learning program. We've developed that for the different standards. So for each standard, we have recorded online modules. You can watch these videos at your own leisure and time. Always around 30 minutes long. We also have now added a lot of subtitles. and they can provide a great introduction into the topic of GHG accounting. So it can be great for you to start to learn more about it, but of course also if you have new colleagues joining the team, or if you also would like to have your business colleagues making aware, why are we doing that? Why do we need data? Such videos can be a great introduction into the topic. As a signatory, you automatically also receive access to the Academy. Will be updated once we have the new methodologies in. There is an introduction, modules on the database, on reporting, but also on the different asset classes and lines of businesses. How to join PCAF, and that's actually very, very easy. There is a commitment letter which has to be signed. Once we have received it, we immediately start the onboarding. Onboarding means you receive access to the database, technical assistance, PCAF Academy. We set up an onboarding call. Then you can, for that money, you can also join the quarterly calls we have in the different regions. And then financial institutions have 3 years' time for their first disclosure. This first disclosure has to be on at least one asset class of their choice. So it could, for instance, be on the business loans asset class. Part of the portfolio would be enough. So it can be on 5% of the portfolio, it could be on 10% of the portfolio. As soon as we have received the disclosure, we upload it to the website, change the status, everything is fine, everything is set. Please observe, of course, regulatory requirements. Also, if you are a PCAF signatory, depending on, might be financial institutions have to disclose much more, much quicker than we are asking. We are fully aware that not every jurisdiction is on the same level regarding that, but as also explained by Lena, PCAF can really help you to fulfill these regulatory requirements you might already have or you're going to receive sooner or later. And this is already actually the last slide. So again, maybe the key takeaways from today. It is about GHG reporting. It is about disclosing your emissions associated with financial activities, but not only. It is the starting point for your overall net zero journey. It can help you with developing targets, a transition plan. We have a lot of local nuances. We have local support groups. We align with the major initiatives. We align with all the relevant regulatory requirements. We have a lot of tools to support you, especially the database, I think is key, but also the technical assistance. As you also have seen, we already have quite strong representatives in Central Eastern Europe and also Asia. We have a lot of signatories, so we definitely would look forward to welcome you amongst PCAF. Just quickly before we go back to the Q&A, so if you have any questions, if you would like to reach out to us, there is the PCAF website. You can always send us an email. We are more than happy to take up the conversation if you're interested in it. And with that, yeah, let's get to the final Q&A session. And I've seen, I think Lena was busy answering questions in the chat.
Yeah, there were two.
Indeed.
Again, for
I think,
yeah.
Lena, you were indeed very busy, but if you don't mind, just again, also for translation purposes, just to repeat the questions and your good answers so that we can have that logged into the translation. Thank you.
Yes. So one question was on how we integrate PCAF finance emission data into TCFD ISSB disclosure frameworks. If so, how do you harmonize the different methodologies? And with that again being said, like we can adapt, or you can adapt with the PCAF standard the breakdown of finance emission reporting. So for ISSB, if they're requiring the reporting of finance emission according to the 5 asset classes I showed you on the page, including, for example, undrawn loans, then you can use our methodologies to disaggregate or aggregate the data accordingly. That will also be included in the updated versions of the standard coming out towards end of the year, where we have a matching of those asset classes. And then there was another question. Let me see. I don't know if it's in chronological order here. I think it was referring to whether to project-specific finance. At least that was my answer. if the institution's investment in Coca-Cola is in the field of improving energy efficiency and not in production, is the methodology the same? And Marco, maybe you can add on that, but we do have a specific asset class for project finance. So if you have information on financing a specific project, so you know, okay, our money that we give the company will be used for project X, then and you have information on that project, you can calculate project-specific finance emissions and report them accordingly.
Yeah, that's correct.
Okay.
So the methodology is really focused on project. So if you have the project value and if you have the information necessary for doing the calculation, you could really calculate the emissions of a specific project.
Thanks very much, Marco and Lina. I'll hand over in a minute to Svetlana to sign off on the session. But before doing so, I'm checking again the Q&A box, and we have no pending questions. So I assume that we're good on that front. So thanks for the participants for the active questions, and in particular, a very warm thanks, Lina and Marco, for taking the time. I think we're all, at least certainly I am, quite impressed by not just the depth of the knowledge here, but also the rigor with which some of this knowledge is increasingly organized while still being very dynamic. So a warm thanks from our side, and also thank you for allowing me to moderate. I'll hand over to Svetlana to close today's session.
Thank you, Peter. Indeed, thank you very much, Marco and Lina, for your great contribution today. And a big round of virtual applauses goes to you, Marco and Lina. And definitely, this topic is new for us, is new for many of our participants. And I admit we will need to organize one more event, maybe one more webinar or a face-to-face event, so to go deeper into calculations and an example, so to better understand and help our clients understand how to apply PCAF standards in practice. So again, thank you very much for your great contribution today. Navigating today's sustainability landscapes takes more than optimism. It requires system thinking, cross-disciplinary insight, and if you want courage to face regional and global uncertainty, and then we discuss about omnibus directive proposal, and still we are waiting for some clarity at the EU level with regard to sustainability reporting. Dear participants, thank you very much for your participation and for your active contribution and today. So please take a few minutes to fill in our survey. There are some links posted in our chat, but the link to our survey will be also shared by email shortly after this event. So your opinion is important for us, so please take your time and provide your feedback. Dear friends, these and previous 3 webinars were organized under Enhancing Accounting, Auditing and Sustainability Reporting Regional Program, co-funded by the Austrian Federal Ministry of Finance, the Swiss State Secretariat for Economic Affairs, and the Austrian Development Agency. Again, many thanks to our donors for their contribution. And thanks to the entire CFRR team, with special thanks to Katerina for her great support with administrative arrangements as well as with online support in Zoom. And I hope you all will join me now with a big round of virtual applauses for our interpreters, Ilir and Afrodita on Albanian channel, Roya and Anna on Bosnian, Croatian, Serbian channel, and Natalia and Sergey on Russian channel. Thank you very much, dear friends. We wish you all to enjoy the rest of summertime without extreme weather conditions. Our team will revert in September with new forces and events to continue our engagement in supporting the corporate and sustainability reporting reform in our region. Thank you. Bye-bye.